Hello and welcome to the Loan Officer Wealth Podcast. I'm your host, Chris Johnstone, and I have an incredible offer for you today. What we've done is we've taken the 10 most profitable methods to grow your mortgage business that we have learned from interviewing the producers on this podcast, many of whom are doing over $100 million in volume per year. And we've packaged them together into a condensed 45-minute training where you get to learn the 10 most successful and profitable activities that you should be running in your mortgage business. Then we show you how to automate those processes with people and systems so that they run and continue to produce loan applications and new partners that want to send you business pre-booked into your calendar without you having to do any cold calls or chasing or really any work. It's a blueprint for you to be able to produce more in your business while actually working less. And you can go get that training today for free at chriswebinar.com. That's chriswebinar.com. So make sure you head over there today, grab that training for free, and make sure that you watch it, because the sooner you get started on implementing these strategies, the sooner you can see results and continue to grow your mortgage business. Thank you again for being here with us for this episode, and enjoy another one on the Loan Officer Wealth Podcast. Hello, everybody, and welcome to the Loan Officer Wealth Podcast. We are graciously joined by Clayton Collins today. Clayton, thank you so much for being on the show.
Chris, thank you for having me.
And you will notice his audio and video looks and sounds fantastic because he is the host of the Housing Wire podcast, Housing News. And we are just thrilled to have you on the show and to get your insights today.
Thrilled to be here, Chris. And actually, I'm traveling today, so I'm in a co-working space. This I guess it's kind of like a WeWork competitor called Industrious, and it's pretty cool. But I am like kind of scrambling to figure out like light and camera and microphone. So hopefully this gets it done today.
Absolutely. Well, it's working out great. And so, for our listeners, if you wouldn't mind kind of sharing your journey, like how did you get into the industry? How did you get to be the host of the Housing Wire podcast? How did that all come together?
Yeah. So I'm a banker by background. I started my career at a large depository and managed a retail branch and managed cross sell for over 1,000 North American branches on deposit and credit products, based out of New York, but kind of looking at the business at a national perspective. And all of this was like during the financial crisis and the great housing crisis. And that was an interesting time to begin and build a career in the banking industry, but also like an incredibly large opportunity to be a early career manager and financial services professional, like learning about sales and marketing and banking and mortgage in one of the most challenging times in our country's economy, which I think certainly changed my operating approach and strategy and comfort with change and ambiguity for forever. And so like that, I mean, I started my career as a banker. I left a large depository to go into investment banking at a Canadian bank and did M&A advisory for a few years. And it was in that opportunity where I fell in with a group that was doing a lot of media transactions. So I worked with a few large media companies as an investment banker on selling a lot of their, what at a time we called non-core, but like just smaller digital media assets. And
Yep.
so I'm a banker that was doing media advisory, and that was a really unique kind of like confluence of experiences that has greatly like influenced the decisions that I've made and the trajectory of my career. So I left the banking world and went out to hunt for businesses to acquire and operate. And I was unique in knowing a little bit about mortgage and a little bit about financial services and a little bit about media that kind of led me to hunting for information services and media and content businesses around the housing and real estate world. And in 2016, I was fortunate to meet the founders of Housing Wire, who at that time had built the business over the course of 8 years. And I put together a plan, and I formed a new business entity called HW Media. which acquired Housing Wire around this strategy of building a media brand and business that simultaneously helped housing professionals move markets forward and better serve their clients and referral partners, but also had a complementary advertising and sponsored content business, which aligned really well with this wave that we've seen over the last decade of more financial technology and prop tech coming into the housing ecosystem in an effort to create a more sustainable and more efficient housing market. So we came in with this lens of like, we found a great business with a great audience, highly engaged audience of housing professionals and origination and servicing and capital markets and a little bit of real estate. And there's something unique here from a content perspective. The business hadn't been built, and that was really my charge. So I acquired the business in 2016. My wife and I moved from New York to Dallas, where the company was headquartered, to step into daily operations and help the founders transition out to their next ventures. And been, elbow deep, knee deep, whatever you want to call it, for the last 6.5 years, building a team of media professionals and working closely with our audience and clients on the technology and solution side to help grow the housing market and move markets forward. And we still have the belief that access to real-time data and perspectives and news and the best information possible helps housing professionals, helps loan originators and real estate agents and brokers and all the executives across the ecosystem make better decisions that help our housing economy avoid another great financial crisis, which was coming back to the beginning of the story, a traumatizing experience for all. And I think that with the right information aligned in the industry, understanding not just your little niche in loan origination or loan servicing or capital markets, but having an understanding of the broader housing economy and broader housing market makes us all better housing professionals to build this incredibly important part of the US economy.
Yeah, absolutely. Man, wow. First off, congratulations. What an incredible story.
Well, thank you. It's been a fun story, but we're still just getting started. So no congratulations. We're still running.
All right. Well, so you mentioned all kinds of really interesting things for our audience here today. And let's start with the media component. And then I also want to talk a little bit about technology, what you see there, specifically with real estate and mortgage. But if we look at the media component, so we see a lot of people in the mortgage industry finally starting to come around to the fact that if they want to go consumer direct and they want to generate their business from something other than past customer referrals or referral partner referrals, if they're going to go direct to media, you can't just buy leads anymore. You can generate your own media. You can become the mayor of your own digital economy or digital marketplace and really become a leader. So when you look at media and having the incredible brand that you've built and all of that stuff, how do you think that a local loan officer or a branch manager with 5 locations should be looking at media and how they use that to grow their business?
I think it was my friend Dave Savage at Mortgage Coach who kind of
I
coined this
love it.
phrase, or he coined it for me at least. And he had me, it was early in the pandemic, had me on one of their Facebook Lives or webinar and to talk about news hacking. And that was like the idea of using the news to be that local mayor and like develop stronger relationships as a source of information for your referral partners and local communities. So today at HW Media, we own and operate Housing Wire, Real Trends, which caters to the real estate agent and broker market, Reverse Mortgage Daily in the reverse mortgage segment, and FinLedger in the prop tech space. And the common theme across our 4 brands is an approach to news and information that informs the professional audience. Our goal is to serve housing professionals across the ecosystem. We're not here to do direct to consumer content. We're not writing articles that are crafted to the denominator that the average homeowner needs to understand. We're crafting articles and crafting content and crafting webinars and events and podcasts to appeal to the mortgage and real estate professional. So the mortgage professional, the local originator, the local agent can take our information and give it context to why it matters to their referral partners and why it matters to their communities. So we're publishing stuff that like, you're not going to post this to Facebook. Like today we published kind of like a bad news article, but like rate lock volume hasn't been this low since December of 2019. That is not content that matters to the first time home buyer, but it is context that matters when you have a first time home buyer who's showing trepidation about their decision to enter the housing market, and being able to approach that conversation with facts and data and intelligence is what we want to arm housing professionals with. So coming back to Dave's word, news hacking, we love the idea of loan officers who subscribe to our Lending Life podcast Lending Life newsletter, taking the articles that we're distributing and like with relevance to the loan originator community and giving that your own context, whether that's like you're rewording it for your own personal newsletter or posting like a video or audio clip to social, whether it's Instagram or Facebook or LinkedIn, like about the context of why what's happening in the market matters to the audience that you want to appeal to.
Yeah. And I think that's so valuable because we're all ingesting so much of that news every day. And those are assets that a lot of people are just leaving on the table because you ingest that news and then you don't do anything with it. When you can be, we've heard that strategy referred to as the lighthouse by Dennis Yu, another podcast guest. And he's like, take that and shine the light out, like highlight, hey, here's this major news source that's published a story and here's what I think about it. Here's what this means for people in Houston or that particular local market.
Yeah. And like, I'm sure that through your podcast, you can like come up with dozens of examples of like certain types of content and news categories that do matter and loan originators should be giving context to. I know in the last week, we've seen two of the biggest HMDA lenders preemptively increase their FHFA like QM limits up to 715,000 in some markets. So like we don't typically see the QM levels set by the FHFA change until November, but now we have two big lenders that are preemptively doing this in certain markets. And that's context that like you can provide value to. So just 2 weeks ago in these same markets, a $700,000 loan would have been jumbo. Now we have a product, new information out there that's like helping you serve borrowers with conforming loans up to 715,000. And like, that's a great article. That's a great news announcement to talk to real estate partners and borrowers about, because it matters to them, but they don't need to understand FHFA and conforming loans and QM. And that's not the terminology. That's the terminology we bring to the professionals, but we look to the professionals to understand their markets well enough to contextualize that to the borrowers and referral partners that they work with.
Oh, absolutely. 100%. And being that expert and being able to share that information, like you said, with your referral networks and with your database, I mean, it can give you a huge reach. Even if you've got 7 to 10 referral partners where you send that out and it's like, hey, conforming limit used to be this, now it's this. If you were shopping in this price range, now you get access to this type of financing, and they send that out. You're touching thousands of people with a really relevant message that can truly drive business.
You said that so well. It's almost like you've done this before.
Well, I definitely see the value in it. And okay, so that in content and being the mayor of your local marketplace, that's really important. Now, you get to interview some incredible people on your podcast. I think most recently you had the CEO of New American Funding on. Like, you've had some phenomenal guests and some phenomenal insights into the market, and have been doing some great content since interest rates started to rise, and we're kind of in this new marketplace right now. So what would you say are kind of like the top couple of tips that you've picked up from all the conversations that you've had on how a loan officer should be looking at today's market and what they can be doing to make sure that they're still growing despite what's happening in the market?
Yeah. I mean, I think there's two conversations that really stand out from the housing news podcast over the last few months. So the conversation with Rick Arviello from New American Funding that you just mentioned, and also a conversation, was it 2 months ago or so, with Anthony Shea from Loan Depot. And like, we're talking about two of the biggest national retail lenders, and also a commonality of two executives who have operated through at least 3 decades of housing market changes. And I think Anthony, even a few more, as he reminded me not to highlight too much in our podcast episode. But I think that there's loan professionals in the mortgage industry today that have entered the industry in the last decade and haven't seen anything but a declining rate market.
Yeah.
And there's loan professionals who've been through many cycles. And when you talk to gentlemen like Rick and Anthony, like it becomes clear that the executives in this industry understand cycles, they anticipate cycles, and they know how to operate through cycles. And if the owners and C-suite leaders of mortgage lenders and real estate brokerages are anticipating this type of market, every professional throughout the ecosystem needs to understand how cycles work in housing and what happens in rising rate environments and declining rate environments. And every smart content creator, executive, and loan originator that I talked to over the last 4 years knew that the refinance wave would not last forever. And your podcast is called the Loan Officer Wealth Podcast. I'm confident you have talked about like the way to manage income in a refi cycle. And what comes clear through some of my podcasts is that the originators, the mortgage banks, the CEOs like Anthony and Rick, that will be stronger on the other side of this are the mortgage banks that knew how to put refi cash flow in the coffers and invest back into the business and prepare their businesses to pick up market share in a period of market disruption. So yes, like you're seeing that done in several different ways in the housing market right now. You're seeing some lenders who came through the market with stronger than average balance sheets and cash on the balance sheet and access to public market equity win share with rate. You're seeing other lenders that are preparing for and executing on acquisitions. You're seeing other lenders that are hiring and recruiting the best talent out there. And you're seeing others that weren't prepared for the cycle and that are reducing headcount to a point that they're cutting into muscle and bone, not just trimming the fat. And I think that's like if you listen to the few of the conversations on housing news, like it becomes clear that like every origination leader out there knew that there would be some fat to trim as we came into a higher rate environment. It's a tough part of the news to cover, but this is unfortunately a market where origination volumes are down significantly, and there's a variable expense profile that comes in this industry, and headcount needs to be reduced to make sure that the industry sees better days and can serve borrowers, home buyers, and the professionals that take part in this industry on the other side. Maintaining that cost structure is just not reasonable. But the players who will gain on the other side are the ones that came prepared to not trim into muscle and bone, but gain market share in a down cycle. And that's what I think we're seeing right now. And the players that are gaining market share in the down cycle are doing that through a few different levers. They're doing that through the levers that I mentioned previously about being able to offer more competitive rates, AKA kind of buying share with price. They're doing that through targeted acquisitions and recruiting. They're also doing that through leveraging this period of increased, let's just call it time, right? Like a little more time on your hands when volume's not as high, to implement technology and marketing strategies to help them be stronger on their side. And I think that there's a lot of players in the prop tech and fintech ecosystem that were waiting for the volume to come down a little bit on the refi side. So lenders had the bandwidth to actually implement and build the tech stacks that they're going to need for the next housing cycle, the next ebb. Let's say we're in a flow right now, the next ebb. You have to build for that and make sure the technology is ready. And so what we're seeing is a market where the smartest, most well-prepared lenders who are operating with a multi-decade time horizon and not just operating to maximize cash flow or productivity in the current cycle, they're investing today to build businesses that will be more productive when either rates normalize or home buyers and sellers get comfortable with the reality that we're currently in.
Yeah, that's so well said. And There's so much to dive into on the prop tech and fintech side of things, but one thing that you said there that really struck me is really investing in putting the systems in place so that when we're in the ebb, that their foundations are laid so that they can take advantage of that growth. And one of the things that we do at Connection Incorporated is we make the phone calls to past clients and referral partners. But also, one of the things that we're seeing stack up really well right now is relationships with financial planners, attorneys, specifically like divorce attorneys, working with financial planners and insurance professionals. And we're making calls, and we have people thanking us for making those calls and starting to set up those relationships and not just looking at realtors. But if we look at our clients, they've gone from just having that one or two, pathways of acquisition to the customer to now truly having a database marketing system in place that's going to scale whether you've got 100 past clients or you've got 1,000 past clients, and you've got calls to all different referral partners that are getting appointments booked, and that's going to continue to grow and scale. So we're even seeing growth. But now the thing that I'm most excited about is we're seeing businesses that get this underlying foundation built underneath the stress of the environment that we're in right now. But it's such a healthy, positive change, because once you're on the other side, it really does truly become exponential if you want it to be on the other side once we, see a different market or even just a
Yeah.
normalization of the market.
Yeah. So a couple things. So I think I botched my analogy. Ebb is when the tide is going out, flow is when it's coming back in. So we're in the flow. We're in the ebb right now where the tide's going out, and we're preparing for the flow. But to kind of to talk about a little bit more on the market we're in, these markets. So we also, I mentioned Real Trends earlier, and we host an event every year called the Gathering of Eagles, which is the 300 to 400 C-level executives from the biggest real estate brokerages. And one of the themes that came out of that event is the flight to quality that happens in a ebb market. And so I think we're seeing that flight to quality happen pretty seriously in like the real estate agent team space. And we're also seeing it in loan origination, where the average originator will have very little chance of producing in 2022 what they produced in 2021, but the top originators will find a way to continue growing or at least meet 2021 numbers. And that comes with the top originators having those stronger referral sources, where the agents are not going to take risk on referring business to a mediocre like loan originator they haven't done a lot of business with, but they will double down on the partners that can have a higher certainty of close and ensure they're providing the right loan product to their clients and can move fast and efficient and not create bottlenecks. So there's a flight to quality that happens in these markets. I think that flight to quality like shows its colors, shows its feathers across the industry in different ways. The best technology companies will continue to grow through this cycle. The best solutions and services providers will continue to grow and improve and capture new logos during this cycle. The best originators will continue to grow and develop the marketing and operational business strategies that will help them be even more successful in the next stage of the market, but they're doing it now. And on the downside, the weaker players, whether it's like low volume real estate agents, newer loan originators who are too focused on refi, tech companies that bring an average solution to market, not a pinnacle solution to market, are gonna feel the pain. And I think this is the time where all of us, have to, be realistic and decide, hey, are we currently best of breed? If not, how do we become best of breed? Because it's better to be best of breed in the top of the market and in lulls in the market. And I think we're seeing a serious flight to quality right now, which is which is going to be a tough dynamic for like, newer entrants into the space and people who haven't been through tougher markets before. But the originators who've seen a cycle and know how to manage the emotions and uncertainty of their clients and referral partners, and also are hopefully aligned with a mortgage bank or brokerage shop or retail lender that has best of breed operational and technology capabilities. Those are the folks that are going to win in this ebb cycle.
Yeah, you are. It's so true. And that dovetails, I think, really well into the fintech conversation and how the marketplace really, yes, we have some forward leaning companies that are looking at technology. But if you look at a fully digital underwriting process and the client experience that comes through, what are you seeing as far as really good technology out there? What are you seeing as the things that people should be looking out for in the future that you think are really going to be disruptive in making those changes and really making those operational efficiencies with our clients?
Yeah, so I'm going to look at this kind of through like the mortgage banker like mindset, not necessarily tied specifically to origination, but in the first like kind of wave of technology adoption in mortgage lending, we saw a lot of front end solutions. So solutions that were focused on point of sale and borrower experience and at the application level. And what we saw over the last 2 years during COVID was a great acceleration of the other end of the spectrum, the closing process, as it was
Mm.
harder or impossible to make it into title offices for wet signature closings. We saw a rapid adoption of online notary, remote online notarization capabilities. We saw just a lot of innovation around the closing cycle. And right now we're in a phase where there's a lot of innovation finally happening in the middle. The processes that make processing, underwriting, valuation significantly more efficient. And we're also seeing a lot of innovation in the servicing and secondary and capital market space. So the mortgage industry kind of like, doesn't always move in the most obvious way of technology adoption, but like went from point of sale, which made sense, the front of the market. You got to like hit that user experience. So even if the process isn't really Amazon like, it at least feels like it on day one for that potential home buyer.
Yeah.
Straight to closing because of the acceleration that COVID made a necessity, to now kind of building out the middle. And building out the middle, I think, is really important to the future state of the housing market, because the middle is where cost and operational efficiencies happen.
Yeah.
That's where client experiences really get better. And it's where the best of breed loan originators can find operating leverage and increase their volume significantly, because the time intensity of moving a loan file through processing underwriting becomes less time consuming. It's also going to be probably one of the biggest influencers over the the way the future of mortgage employment looks. And
Hmm.
I think a lot of the efficiencies that we're seeing squeezed out of the market today, and I say efficiencies as my like corporate speak for layoffs and ops,
Yeah.
and and like the mortgage lenders we're talking to are looking for ways to make like these operational efficiencies that they're finding right now permanent. And I think that's something that like it has to be recognized. And like there may be fewer mortgage ops jobs in the ecosystem in the future if the industry is successful in technology adoption and implementation. If we fail in that process, the next time we see rates drop back beneath this 5 or 6% threshold we're at right now, then the industry is going to react and start hiring a lot of ops and processing and like all the roles that are being squeezed out right now. And we're
Yep.
going to have to go through the same wave again, where like mortgage headcount moves with origination volume. But the goal of a lot of the technology innovation, which for better or for worse will decrease the human dependency in mortgage operations, will create a more sustainable employment spectrum for the housing industry. And maybe that's for the best. Instead of having these rapid hiring and firing waves, we'll find a business model and a technology infrastructure that allows lenders to grow and operate through cycles without having massive swings in headcount.
Yeah.
And it's fewer jobs, but it's more stable jobs that are focused on people's highest and best use, and which will ultimately be a positive impact for loan originators and most importantly for consumers.
Yeah, absolutely. And I think that that's just the way that market cycles work. in large scale. I mean, when you find inefficiency, it's not like you're going to go backwards and be like, okay, let's go back to the old inefficient, less profitable way. Let's move forward. And I think technology, we're seeing, the mortgage industry certainly isn't leading in that front. But I think once those solutions come, they're going to be here for good.
Yeah. And this is like the testing ground, right? Like in the past, when we've gone through cycles, we haven't implemented technology fast enough to kind of reduce that like massive swing in industry labor counts. And like, wouldn't it be amazing if we could go through the next refi boom and like that could be handled by existing like employees and existing loan originators and existing ops talent without having to like double headcount in some of these origination heavy shops? That'd be good for the consumer. It would result in a lower cost structure. It'd be great for the mortgage banks as a result in a lower cost structure. And maybe it's great for the average employee because it's stability instead of this like massive hiring and firing swing. And it might mean fewer people work in mortgage operations, but it will be more stable.
Yeah, I couldn't agree more. So the name of the podcast is Loan Officer Wealth, and so occasionally we will touch on the topics of investing, and I always like to keep my circle really small. I only try and invest in things that I'm either directly involved in or it's in my wheelhouse, in my environment. And I've made a significant investment in a prop tech company that's based out of the States, that's going to market and also going to the consumer first, and then starting to branch that out and potentially refer it to a real estate agent or potentially refer it over to a mortgage company. And so that company, the name of it is HomePie. And it's a direct to market model where people can go in and list their home in a marketplace, sell it themselves, but get additional services. And it's actually an engine for all of the paperwork that's necessary for a real estate agent to do. So many real estate agents are actually coming to the service and signing up and using it in the free model because it helps them document all their clients, keep track of all their paperwork, actually run through the process of all of the contracts and sending everything back and forth, messaging platform side of it, and all of that. And so, what are you seeing on the prop tech side of things that you think, as the market starts to shift and as we move through this, what do you think is going to be significant in the future in the prop tech space?
One of like the biggest mindset shifts I've seen in prop tech in the last few years is a move away from the mindset and business model of disruption
Mm,
to an approach to how prop techs can work with existing industry incumbents to make the industry more efficient. And there's also been a mindset shift on the incumbent side where loan originators, mortgage bankers, real estate agents are no longer looking at some of these companies that initially coined themselves as disruptors. They're not seeing them as disruptors, they're seeing them as solutions partners. And
yes.
like this, you brought up the conversation with Rick Arviello earlier. I mean, Rick goes into talking about a future that he sees with one we talked about, like iBuyers and like the cash offer capability, and like that was something that like the real estate agent and brokerage market initially saw as a disruption or a threat, but like quickly became another tool in the toolkit. I hosted a gentleman who's an analyst on Open Door last week, and the Open Door's biggest line item on their expense infrastructure, according to my guest, is their real estate agent commissions. And so,
Mm,
like this, somebody that was previously a threat is now a source of revenue for agents. So, I think kind of across different categories in prop tech, you're seeing players look for ways to partner directly with industry incumbents, but you're also, this is kind of driven by like the market change we've seen in the last 6 months. Venture capital dollars are not flowing as fast as they were a year ago. And building a prop tech business that has historically operated at a loss because the promise of venture capital was right around the corner is
mhm.
becoming less and less prevalent. So you're seeing prop tech players look for revenue diversification and revenue expediency. And that will change the way they operate. Revenue diversification and revenue expediency comes through partnerships with incumbents. It doesn't come through the disruption model. And so that is a massive change that I think hasn't really occurred this year, but has started occurring over the last 3 years, and like a wave that we see that's building. Now, does that mindset shift down the road at some point? Like, do the companies that came in as friendly faces like suddenly become threats or competitors in the future? TBD. But ultimately, like you're saying, I'm seeing a friendlier prop tech space that is placing more value in the front lines of the housing industry, the agent and loan originator, because I think as much as things change, one thing is consistent. Buying a house is one of the biggest decisions that most consumers make in their life. And there still is value and comfort found in a local market presence, somebody that can provide advice, someone that can walk a consumer through an unnecessarily complicated real estate transaction.
Absolutely. That's fantastic. Clayton, man, what incredible insights, and thank you for that. Um, so continuing down the evolution and a lot of the future of what's happening in our industry, what do you think about the adaptation of blockchain and what that's going to do for the industry?
Yeah. So, I mean, I think that there was years where like the adaptation of blockchain and we've had people in the industry talk about NFTs and crypto based loans has really been nothing but marketing language and like
Mhm.
kind of an ability to draw like press and consumer and partner attention. That's changing. So like I think there's still a few players out there who have like confusing use of the word NFT and like not efficient use of like efficient like blockchain mechanisms. But
Yep.
you are seeing kind of segments of the insurance world as it relates to property assets and segments of the title world that there's adoption happening, but it's not going to necessarily like be the fastest curve that you've ever seen. Like there's going
Yep.
to be like segments of the market where blockchain and servicing and blockchain and insurance like start to make a meaningful difference, and others where it's going to be a slower haul. But we are seeing players like actually in market right now with blockchain enabled solutions. I keep coming back to housing news guests, but I had two gentlemen from Radiant on last week talking on the Housing News podcast about their Title Genius product, which is a blockchain enabled title capability that is not a promise from the future. It's actually in market now, and they're working with clients on like bringing title to the blockchain. So it's a real thing, and it's definitely in market. But I still think there's some, kind of confusing PR-ish headlines about NFTs and crypto mortgages that have gone to the wayside, especially with like how Bitcoin and Ethereum prices have moved in the last year. Like these like Bitcoin down payment or crypto down payment products just aren't as attractive as they were
Oh
12
yeah.
or 18 or 24 months ago for the consumer or for the lender who's taking that as a down payment. So continues to be innovation, and there's some players out there that are investing a lot and bringing real capabilities to market. I mean, I always keep a close eye on Mike Cagney at Figure and like what they're doing in the home equity space around blockchain enabled lending capabilities. So there's a lot to watch, and there's actually seems to be some players in market with solutions that are real.
Mhm. That is fantastic and so valuable. Um, well, Clayton, I want to be respectful of your time. So, if people, well, obviously, if you could give us the link on where we can get information about the Housing News podcast, and everybody should subscribe to that. Again, a phenomenal resource for you to repurpose that content and give your value to it. So, shout that out. But anything else that you'd like to share? How do people get a hold of you?
Yeah, so a couple of things I'll highlight. So you go to housingwire.com to learn all about all the different content sources that we have for the housing industry. If you're on mobile, you can press that little hamburger icon and click to our podcast page and subscribe to Housing News, or on desktop. right from the top of our toolbar, there's a podcast drop down and a newsletters drop down. So we do have a newsletter specifically for loan originators called Lending Life, which we curate 4 days a week of content that's most relevant to the loan origination ecosystem. So I really do suggest that people check out this free newsletter called Lending Life, which you can subscribe to through Housing Wire. We're also hosting an event at the end of this, at the beginning of October 3rd and 4th, called Housing Wire Annual, which covers all things housing. We bridge together loan origination and loan servicing and real estate brokerage and appraisal and valuation and closing all into one event in Scottsdale. So if you want to join us in Scottsdale for 2 or 3 days in October, that's also loud and proud on the Housing Wire homepage, and you should check us out. We have some really cool speakers like Ryan Serhant and a bunch of other folks that you'll find really energizing and educational.
Nice. That is phenomenal. Well, it sounds like an incredible event, and I would love to attend. Perfect. Okay, well, everybody, thank you so much for listening. Clayton, again, thank you for being so generous with your time here today. And don't forget to like and subscribe, and we will see you on the next episode. Hey, it's Chris. Thank you so much for listening, and I hope that you enjoyed our guest today on the podcast. This is a reminder that we have just finished taking the greatest lessons from all of our guests and packaging them together into a brief online video presentation that's going to teach you the 10 most profitable ways to grow your mortgage business. And then we show you how to automate those processes in your business with people and systems so that you get the results without you having to do the work every day. This is quite literally a blueprint so that you walk into your mortgage business every day with pre-booked appointments with borrowers that want to meet with you and referral partners that want to send you business, so that you are spending your time inside your mortgage business on the highest dollar per hour activities, and you truly become the executive of your business, a true business owner, rather than just somebody who's going to a job every day and making a wage on the way through. This is an absolutely incredibly powerful training for you, and I cannot wait for you to experience it. So head on over to chriswebinar.com. That's chriswebinar.com to get that free training today. Now, if you could do me another favor, if you enjoyed this episode, please head on over to iTunes, search the Loan Officer Wealth Podcast, and give us a 5-star rating and review, really on any podcast platform that you're watching this on. That just 30 seconds of your time goes to help another loan officer in the industry discover this information and really help put their life and their business on track for more success. We are all in this together, and there is more than enough for all of us in the industry. So I would love if you left us that 5-star rating and review. Don't forget to stay tuned for our next episode, and I'll see you then.